Today we're going to talk about compensating factors for an FHA loan. I want to explain what compensating factors are, so that way you can understand how it might apply to you when you are applying for an FHA loan. So in some instances you might have a situation where your file may need to be manually underwritten. Maybe you've got poor credit scores, or you've got a recent Chapter 13 bankruptcy. Whatever it is, when the lender puts your application through the automated underwriting system, it might indicate that your file needs to be manually underwritten. And when that happens, there are some things that will help you. These things are called compensating factors that could help your loan to get approved, even though there's another aspect of your loan application that's not so good. So I'm just going to touch on a couple of these compensating factors, and if you're having difficulty getting approved for the mortgage, we can definitely help you with that. So the first thing is residual income. So if you've got additional income, which means that your debt to income ratio is lower, right? Your income for the loan application is far greater than what is likely needed to qualify for the loan amount that you're applying for, then that additional income would be a compensating factor. Another one would be cash reserves. So even though the down payment requirement's 3.5%, and then you have closing costs, well, let's say you've got plenty of money left over in the bank after closing. The lender will see, oh well, the down payment's $10,000 and the closing costs are $5,000, but even after that money's taken into consideration, they still have another $30,000 remaining in the bank. That's going to be a compensating factor in your favor. Minimal payment shock is another one. So payment shock is when the lender or the underwriter looks at your application and they say, okay, your current rent payment or your current mortgage payment is here, but then your new mortgage payment is going to be way up here. They look at that gap as payment shock, meaning, oh my God, I can't handle the new payment. It's going to cause a crisis in your life. So they look for the payments that you have to live for whether it's your rent or your mortgage to be similar, and therefore to have no or little variation, which means a small amount of payment shock. If you have high credit scores, that's another compensating factor. So maybe you're on the borderline of getting approved because of, say, your income or something else, but if you have very high credit, the underwriter could look favorably upon your application based upon the fact that you've got high credit. And then the other compensating factor that I'm going to mention is having steady employment. If you have not been job hopping, if you've been in the same job for years, in the same field for many years, and they look at your work history and it's very steady and consistent, without taking breaks for any reason, when they see a lot of changes in jobs, and I just started this job 3 months ago, and the job before that I was only at for 6 months, it makes lenders very nervous. Conversely, when they see that stability in a job and in an industry that you work in, it makes them feel more comfortable in approving your mortgage if there's something else about your application that may be borderline. So that compensating factor and all of the ones I've mentioned can help push you over the edge to get your loan approved. If you do have any questions, or maybe you have a compensating factor that I did not reference here, just ask down in the comments below. If you want to get pre-approved, just follow the link in the first pinned comment, and also down in the description will help you there. Thanks for watching, and have a great day.